The moment the news dropped, the entire crypto world trembled. The new Ripple CEO had spoken, and every word carried the weight of seismic change. XRP will literally replace SWIFT, the headline screamed, and anyone reading it felt the electricity in their veins, the rush of adrenaline that comes when an entire industry is poised on the edge of transformation. People had been talking about Ripple for years, but now it wasn't speculation, it wasn't hope, it wasn't a dream whispered in dark forums. It was a declaration. And declarations like this didn't just ripple through the market, they shook it to its core. The very idea that a cryptocurrency could challenge, disrupt, and ultimately replace SWIFT, the centuries-old global banking backbone, sounded impossible, audacious, revolutionary, and yet here it was, stated clearly, unapologetically, by the very people leading the charge. You could almost feel the tension in the air, the collective heartbeat of investors, analysts, traders, and ordinary people who suddenly realized that what they were witnessing was not a small shift, it was a tectonic shift, a redefinition of the financial world as they knew it. And what made it even more electrifying was the CEO's confidence, the unwavering certainty in their voice, the clarity with which they painted the future, a future where XRP didn't just coexist with traditional systems, it replaced them, it dominated them. It became the new standard of cross-border payments. Every syllable carried conviction, every phrase a punchline to the old way of thinking, every sentence a call to open your mind and accept that history was being written before your very eyes. The first thought that struck anyone reading that statement wasn't, could it be true? It was, what does this mean for me? Because in the world of finance and technology, when an idea this bold emerges, it doesn't just affect corporations or banks, it affects individuals, ordinary people, the ones who have wallets, who trade, who hold, who speculate. Every portfolio suddenly had a new heartbeat. XRP was no longer just a coin, it was a statement of intent, a challenge to legacy systems, a promise of speed, efficiency, and security that the old world couldn't compete with. And the timing couldn't have been more dramatic. At a moment when the world was questioning outdated financial systems, when digital transactions were becoming the norm and frictionless, instantaneous money movement was no longer optional but expected, Ripple stepped forward and said, in essence, we are the future, and we are here now. The boldness of it ignited debates, conversations, online forums buzzing like a hive, every crypto influencer, every analyst, every casual investor trying to process the implications. Could a single cryptocurrency replace the backbone of international banking? Could a company defy decades of entrenched infrastructure and win? And the answer, according to Ripple's CEO, was not speculative. The answer was yes, and the reasoning was so detailed, so compelling, so meticulously laid out that it left little room for doubt, only room for action, observation, and awe. From the first moment of the interview, it was clear that this was not a PR stunt, not a marketing gimmick, not hype designed to manipulate prices for a few minutes of glory. This was a blueprint, a vision, a carefully constructed roadmap showing how XRP could scale, integrate, and transform every corner of the banking world. The CEO didn't just talk about speed or cost reduction. They talked about interoperability, compliance, regulatory clarity, and the painstaking work done to make XRP a system banks could trust. Each word carried gravitas. Every explanation reinforced the inevitability of this transition, and the audience couldn't help but sit forward, lean in, feel their pulse quicken with the realization that this wasn't just about crypto. This was about rewriting the rules of global finance. And then came the details, the technical explanations, the partnerships, the live examples of transaction efficiency, the metrics that weren't just numbers, but proof that XRP could handle the scale, the volume, the reliability that SWIFT had dominated for decades. Every chart, every data point, every anecdote reinforced the narrative, strengthened the case, amplified the excitement, and made it impossible to ignore the undercurrent of revolution that pulsed beneath every sentence. For anyone who had doubted Ripple, who had questioned the legitimacy of XRP, who had treated it as a fringe experiment, the interview was a wake-up call, a challenge to their skepticism, a demand that they reconsider everything they thought they knew. The CEO wasn't just confident, they were laser-focused, exuding a mastery of both vision and execution, a rare combination in any industry, but particularly in the chaotic, often unpredictable world of crypto. And confidence, as we all know, breeds movement. Markets respond to certainty, investors respond to leadership, and the broader financial ecosystem takes note when someone speaks with authority. The implications were immediate. Trading volumes surged, social media lit up with speculation, and news outlets scrambled to analyze, predict, and explain what this statement meant for the global economy. It wasn't just XRP holders who were affected. Every financial player, from small fintech startups to massive international banks, had to pause, think, and prepare. And yet, the CEO's approach wasn't about creating fear or panic. It was about opportunity. The tone of the interview suggested that XRP wasn't here to destroy, but to evolve, to elevate, to provide a more efficient, transparent, and connected alternative to a system bogged down by inefficiency, bureaucracy, and cost. The way they explained it, replacing SWIFT wasn't an act of aggression. It was a natural outcome of progress. It was as if technology, like water, had found the easiest path forward, and Ripple had simply positioned itself to flow into that channel. Every analogy, every statement, every example reinforced the inevitability of this change, and the clarity of the CEO's message left little room for hesitation. Investors understood that this was the moment to pay attention, to analyze, to consider strategic moves, because history doesn't wait, and those who wait too long often find themselves on the sidelines of innovation. The interview also revealed Ripple's strategic partnerships, their global reach, and the increasing adoption of XRP in real-world financial systems. This wasn't vaporware. This wasn't promise for the sake of hype. This was tangible progress, partnerships with banks and institutions that could actually move money faster, cheaper, and with more transparency than ever before. The CEO made it clear that regulatory compliance was central to their plan, emphasizing that XRP's design allowed for auditability, oversight, and adherence to global financial standards, addressing one of the primary concerns that had historically limited crypto adoption. In doing so, they dismantled the skepticism of traditional bankers, provided reassurance to regulators, and created a bridge between the old financial world and the new. Every sentence of the interview was a calculated step designed not only to inform, but to inspire, to make people believe that this was no longer speculative, no longer theoretical, no longer maybe someday. XRP was positioned as a practical, operational, scalable solution capable of taking the place of SWIFT in real-time cross-border payments. The CEO's energy was contagious. Viewers could feel the excitement, the certainty, the momentum building with each example, each explanation, each confident assertion. And it wasn't just about technology. It was about vision, about leadership, about redefining what global finance could look like in a world increasingly dependent on speed, transparency, and decentralization. Even casual crypto enthusiasts couldn't help but lean forward, caught in the gravitational pull of the narrative. Those who had ignored XRP before suddenly realized the magnitude of what they were witnessing. A company and a token that had spent years quietly building infrastructure, solving regulatory problems, creating partnerships, and preparing for this exact moment. The CEO made it impossible to dismiss XRP as just another coin, as just another token riding speculative waves. XRP was framed as a cornerstone, the very foundation of a new financial system designed to replace a legacy that had been slow, costly, and opaque for decades. The clarity of the message combined with the tangible evidence presented made it obvious that Ripple's vision was within reach. Speed, efficiency, adoption, trust, all elements that SWIFT had taken decades to establish, could now be achieved with XRP, and with every passing day, adoption grew, partnerships strengthened, and the vision moved closer to reality. Social media exploded, analysts scrambled to calculate potential market impacts, and traders began to reposition themselves in anticipation of a monumental shift in the payments landscape. For anyone paying attention, it was exhilarating, terrifying, and completely unavoidable. Every word spoken by the CEO reinforced the idea that XRP wasn't speculative. It was inevitable. It wasn't a gamble. It was the future. And that certainty, delivered with such precision and authority, caused a ripple effect far beyond the immediate crypto community. Investors, banks, regulators, and financial institutions all had to reconsider their positions, reassess their strategies, and imagine a future where XRP replaced SWIFT as the global standard for cross-border settlements. The possibilities were enormous, the implications staggering, and the energy palpable. And yet, despite all the excitement, the CEO grounded the conversation in realism. They acknowledged challenges, regulatory hurdles, and the need for continued adoption, but framed these not as obstacles, but as steps in a journey that had already begun. They painted a picture of a carefully orchestrated strategy, a path that was not just visionary, but actionable, demonstrating how XRP could integrate seamlessly with existing financial infrastructures while offering unparalleled speed, cost-effectiveness, and reliability. For the audience, it was thrilling to watch, inspiring to hear, and motivating to imagine that they were witnessing history being made in real time. This was more than just another crypto announcement. This was a declaration that the financial world as we knew it was entering a new era, that a decentralized, transparent, and technologically superior system was ready to take over the role that SWIFT had held for decades. And for anyone paying attention, anyone willing to engage, the message was crystal clear. XRP is not waiting for permission. It is not tentative. It is here. It is growing. It is executing, and it is unstoppable. The CEO's passion, energy, and mastery of both vision and execution left no room for doubt. Every nuance, every explanation, every example reinforced the inevitability of XRP's rise. Listeners were left with one conclusion. The future of cross-border payments is here. It is decentralized. It is efficient, and it bears the symbol XRP. And as the interview concluded, the energy didn't fade. It multiplied, spreading across social media, trading platforms, financial forums, and news outlets, creating a tidal wave of anticipation, speculation, and excitement that could not be contained. It was not just an announcement. It was a movement. It was a challenge to the old guard. It was a call to action for anyone who wanted to witness, understand, and participate in the evolution of global finance. Ripple had spoken, XRP had risen, and the world would never be the same again. The announcement sent shockwaves across the financial world, reverberating through the corridors of power, the digital screens of traders, and the quiet offices of analysts who suddenly realized they had underestimated the scale of what was unfolding. XRP was no longer a niche cryptocurrency whispered about in forums or watched passively on charts. It had become a movement, a bold declaration that the old systems, slow, cumbersome, expensive, were no longer untouchable, and that technology, strategy, and vision could topple even the most entrenched financial infrastructure. And as the CEO elaborated, every word was a calculated strike against doubt, a masterclass in turning skepticism into awe, caution into anticipation, and hesitation into immediate engagement. The language was precise, technical yet accessible, blending complex financial logic with simple, undeniable facts that left no room for argument. Banks that had been lukewarm toward digital assets suddenly leaned forward, paying attention, reconsidering, evaluating, because Ripple was no longer asking for permission. Ripple was showing proof, evidence, and capability in real time, and that clarity was magnetic. The first impact was immediate. Markets moved, not just in cryptocurrency, but in traditional banking instruments, because XRP's potential to replace SWIFT threatened to shift liquidity, settlement times, and operational costs on a global scale. Investors, both seasoned and new, saw opportunity in every sentence, every example, every metric shared in the interview. The CEO didn't just claim that XRP could replace SWIFT. They demonstrated the infrastructure, the global reach, and the efficiency metrics that made the assertion credible. Every transaction processed, every partnership mentioned, every integration outlined became evidence that XRP was not speculative. It was operational, functional, and scalable. And with that credibility came momentum that spread like wildfire across news outlets, social media, and industry analyses. Every corner of the crypto community reacted differently, but every reaction shared a common heartbeat. Recognition that Ripple had escalated beyond being just a company or a token. It had become the spearhead of a financial revolution. Enthusiasts celebrated the vision. Traders calculated strategies, skeptics hesitated, and analysts scrambled to understand the implications for traditional finance. It wasn't just about replacing SWIFT, it was about rewriting the rules of global money movement, removing friction, enhancing speed, and providing transparency that banks had only dreamed of achieving. And the CEO knew this, spoke to this, and demonstrated it with the confidence of someone who understood that clarity of vision breeds both trust and action. The interview flowed like a masterclass in disruption. The CEO outlined the real-world impact of XRP on remittances, cross-border trade, and corporate settlements. Examples were concrete. Payments hat used to take days and cost significant fees could now happen in seconds at minimal cost. Regulatory compliance was not an afterthought. It was embedded into the structure, allowing XRP to meet the standards of global financial institutions. Speed, security, and efficiency were no longer marketing slogans. They were tangible, measurable advantages, and every example made it clear that adoption was not a matter of if, but when. And that sense of inevitability was infectious, spreading from viewers to the wider market, creating anticipation, excitement, and a sense of urgency that Ripple had built through years of preparation and infrastructure development. What set this interview apart from any previous cryptocurrency announcement was the combination of visionary thinking and grounded practicality. The CEO wasn't selling dreams. They were showing reality. They weren't talking about abstract potential. They were presenting working systems, live integrations, and partnerships with real banks and financial institutions. Every mention of partnerships with global entities was proof that XRP was already moving in the real world, bridging the gap between crypto speculation and functional financial technology. And this bridge was precisely what made the statement that XRP could replace SWIFT not only believable, but actionable in the minds of investors, institutions, and observers. The CEO also addressed the skeptics head-on, dismantling common objections with precision and clarity. Concerns about scalability, security, adoption rates, and regulatory hurdles were all acknowledged, but each was followed by concrete solutions, metrics, and examples. Scalability was demonstrated through live transaction volumes. Security was evidenced by robust cryptography and transparent audit processes. Adoption was reinforced by the growing list of partners and integrations. Regulatory challenges were addressed through proactive engagement with authorities and compliance frameworks. Every objection was met not with defensiveness, but with logic, transparency, and proof, transforming doubt into opportunity. And as the interview continued, the broader implications became undeniable. The potential replacement of SWIFT by XRP wasn't just a technical or financial shift, it was a geopolitical and economic shift. Banks around the world had long depended on SWIFT for cross-border transactions, making it a backbone of global finance. If XRP succeeded, it would not only streamline payments, but also redistribute influence, reduce reliance on legacy systems, and challenge centuries-old structures. The CEO didn't shy away from this. They framed it as progress, as evolution, as the natural consequence of technology meeting necessity. And this framing resonated deeply because it didn't rely on fear or hype. It relied on evidence, on logic, on strategic positioning, and the undeniable reality of functional results. Every listener, whether seasoned trader or casual investor, felt the gravity of what was being described. XRP wasn't just a coin, it was a systemic shift, a new standard for how money moved across borders, and the implications were staggering. Corporations could save billions in fees, international transactions could become instantaneous, liquidity could flow more freely, and financial inclusivity could expand dramatically. The CEO made it clear that Ripple wasn't proposing theory. They were implementing infrastructure, ensuring compliance, and building a network capable of supporting real-world needs at scale. And for anyone paying attention, the message was unmistakable. The future was arriving, and XRP was at its forefront. The social and digital reactions were immediate and explosive. Forums buzzed with speculation. Twitter and Reddit exploded with discussions. Analysts dissected every word, and news outlets ran headlines that captured the urgency and magnitude of the announcement. The interview created not only awareness, but momentum, a sense that history was unfolding, and that those who engaged now would witness, participate, and potentially profit from a financial revolution. And that was precisely the effect Ripple wanted, because awareness, adoption, and trust are all critical components in the adoption of any new financial system. The CEO's energy was relentless, their delivery masterful, their conviction palpable. Every sentence carried a hook, every example reinforced credibility, every assertion challenged the status quo. They presented a vision not of hype, but of inevitability, blending technological explanation, real-world data, and strategic foresight. The result was a narrative that was impossible to ignore, one that commanded attention from investors, analysts, regulators, and the global financial community alike. And yet, even amidst all the excitement, the CEO maintained clarity, caution, and discipline. They emphasized that replacing SWIFT wasn't a trivial task, that adoption required trust, partnerships, and meticulous execution. They framed challenges as steps, obstacles as opportunities, and uncertainty as a call to action. The message was clear. XRP was not speculative. It was inevitable. But only if the strategy was executed correctly, responsibly, and with vision. The Ripple CEO's announcement had barely settled in the global consciousness when the full implications began to surface, cascading across financial markets, crypto exchanges, institutional boardrooms, and government oversight committees. It was no longer a simple story of a cryptocurrency gaining traction. It was a declaration that a new financial order was emerging, that the centuries-old dominance of SWIFT could be challenged and potentially replaced by a system built for speed, transparency, and global inclusivity. Every investor felt the weight of this revelation immediately, and every casual observer began to understand that this was not hype. It was a carefully orchestrated, operationally supported, technologically validated move that demanded attention. The CEO spoke with authority, articulating complex financial mechanics in language that was both compelling and actionable. And the audience could sense that this was not a marketing ploy, but a meticulously planned strategy executed by a company that had spent years building the infrastructure necessary for global dominance. As the words XRP will literally replace SWIFT echoed through forums, trading platforms, and news outlets, investors and analysts scrambled to digest the scale of what was being proposed. SWIFT had been the backbone of international finance for decades, trusted by banks across the world for secure and reliable messaging and cross-border transactions. It was a system that had resisted disruption, that had maintained dominance through trust, regulation, and decades of established practice. And yet, Ripple's CEO articulated a vision where XRP could not only coexist with SWIFT, but outperform, outpace, and ultimately replace it in practical terms. Every listener could grasp that this wasn't mere speculation. It was a blueprint, a roadmap, a tangible path toward a reality that could redefine global finance. The CEO outlined XRP's advantages with precision, settlement times measured in seconds instead of days, drastically lower transaction costs, immutable transaction records secured through cryptography, and a network designed for compliance with global financial regulations. The technical explanations were accompanied by concrete examples, real-world transactions conducted with banks, cross-border remittances processed with unparalleled efficiency, and partnerships that validated the operational readiness of XRP at scale. Listeners could almost visualize the movement of funds instantaneously across continents, a seamless web of digital liquidity replacing the cumbersome, expensive delays that SWIFT had long imposed. Every detail reinforced the inevitability of adoption, and the CEO's confidence radiated with every example, every statistic, every case study shared. Social media exploded, traders reevaluated portfolios, analysts updated models. Every mention of the interview spurred conversations, debates, and speculation about the broader implications for global finance. Ripple's announcement was no longer a niche crypto story. It was now front-page news in financial publications, a hot topic in economic forums, and a catalyst for strategic reassessment in boardrooms worldwide. The energy was palpable, contagious, and electric. A sense that history was unfolding, that a new paradigm was being tested, and that those who watched carefully could anticipate the seismic shifts that were about to reshape the financial landscape. The CEO also addressed regulatory concerns head-on, presenting XRP not as a disruptive threat, but as a compliant, auditable, and globally accountable solution. Regulatory skepticism had long been a barrier for cryptocurrency adoption, but Ripple's strategy made it clear that compliance and operational efficiency were not mutually exclusive. By providing frameworks that aligned with international financial laws, offering transparent reporting mechanisms, and demonstrating adherence to anti-money laundering protocols, Ripple positioned XRP as a credible bank-ready asset capable of integrating seamlessly into existing financial systems. This was the turning point for institutional adoption. Banks and financial institutions could no longer ignore XRP without risking obsolescence. What set this announcement apart was the clarity of vision and operational transparency. The CEO didn't rely on vague promises or speculative projections. Instead, they detailed the path forward with measurable milestones, showcasing the progress Ripple had made and the steps still required to achieve full-scale adoption. The audience could see a future where XRP was not just a digital token, but a functional backbone for international settlements, a system capable of handling billions of dollars in transactions every day with speed, security, and transparency. Every sentence, every point, and every example reinforced the message. XRP was ready for prime time, and the global financial system would soon have to adapt or be left behind. The ripple effects extended beyond finance. Governments and regulators began analyzing the implications for monetary policy, cross-border trade, and economic influence. Countries that relied heavily on SWIFT were suddenly considering alternatives, weighing the benefits of a system that could reduce transaction costs, enhance speed, and provide transparency without the friction of legacy infrastructure. The CEO highlighted that adoption was not about replacing institutions, but enabling them to operate more efficiently, reducing barriers to global trade, and opening opportunities for financial inclusivity that had long been inaccessible to smaller nations or emerging markets. Every word suggested that XRP's impact would be global, systemic, and long-lasting. Traders responded with immediacy. Cryptocurrency markets surged as speculation and anticipation fueled buying activity. XRP holders found renewed confidence, while skeptics reevaluated long-held assumptions about the coin's potential. The interview became a catalyst for action, prompting portfolio adjustments, strategic partnerships, and discussions that rippled through both crypto and traditional finance communities. And yet, the CEO remained calm, composed, and deliberate, emphasizing that strategic adoption, careful integration, and operational excellence were far more important than hype-driven short-term gains. The tone was visionary yet grounded, inspiring confidence in both the technology and the leadership guiding it. The CEO also spoke to the public directly, framing XRP as not just a financial tool, but a means of empowerment. Faster, cheaper, and transparent payments meant that ordinary people, small businesses, and emerging economies could participate in global trade with fewer barriers. Remittances could reach families instantly, businesses could operate more efficiently, and financial services could extend to regions long excluded from global banking networks. The narrative shifted from corporate disruption to societal transformation, underscoring that XRP's potential was not confined to wealth creation for a few, but could benefit millions worldwide. Every paragraph of the interview was designed to reinforce momentum, to maintain attention, to ignite curiosity, and to catalyze belief. The CEO didn't just speak. They orchestrated a narrative that combined logic, emotion, and vision. Listeners were drawn into a story that was as much about innovation as it was about inevitability. XRP wasn't a gamble. It was a calculated leap toward a future that was unfolding before everyone's eyes. And with every passing minute, every detail shared, every partnership revealed, the energy built, creating a crescendo of anticipation that swept across markets, media, and global financial institutions alike. As the interview progressed, the CEO outlined Ripple's roadmap in meticulous detail. They discussed the expansion of partnerships, the ongoing efforts to secure regulatory clarity in multiple jurisdictions, and the development of technological tools designed to scale adoption. They highlighted real-time case studies demonstrating XRP's efficiency, from instant cross-border transactions to multi-billion-dollar settlements, emphasizing that the system was not theoretical but operational, tested, and ready to scale. The clarity of vision, combined with the operational evidence, made it clear that the era of slow, costly, and opaque financial transactions was ending, and the new era, driven by XRP, was beginning. The impact on global finance was profound. Analysts began recalculating the risks and opportunities. Banks considered strategic adoption, and governments explored regulatory frameworks that could accommodate XRP. The announcement catalyzed a wave of action, with traders, investors, and institutions all reassessing positions, strategies, and priorities. The CEO's confidence and clarity provided a framework that transformed speculation into belief, hesitation into action, and skepticism into engagement. XRP was no longer just a token. It was the harbinger of a new global financial system.